Well, good afternoon, everyone. It is Shooter Scott Henderson. Going to do a little market recap, cover a couple things. Of course, at the end of our presentation, please do review our disclosure. Now, today we're staring at the VIX. And sometimes we get clear signals and sometimes we have to read between the lines. And that's sort of what I'm reading today. So something's going on. I can't tell you what. I can't tell you if it's treasuries. I can't tell you if it's because we have a large number of banks that are overextended because of treasuries. There's a lot of rumors going around. There's rumors going around that China has been consistently increasing its liquidation of treasuries, sort of in countermeasures to the U.S. tariffs. I tend to believe that. And the VIX right here implies that some large funds are holding positions here around 29 bucks because we didn't break down back to the range. I mean, we should be back down to 22, 24 bucks, but we didn't. We came down there and then we bounced right back off of it. So that implies that there's quite a little bit of risk still in this beast. Now, even though this is a confirming high and this is a divergent high, right, on the 4-hour, it is still only drive one in what I call my mound structure. So in all cases, you have a second drive. So that puts us well over 50 bucks at some, if it's going to continue, or unless this ends up being a one-off event, which I can't tell you specifically, but I'm going to say that's less than a 30% chance that it's a one-off event in my take. So the fact they're holding positions at 2:26 p.m. on April 11th implies they're carrying that risk-off scenario through the weekend because they think something might manifest between now and Monday. So that in mind, let's jump over to the NASDAQ. And just to be timely, I'm going to address shorter time frames today. Main point is we put in this range between this 468 and this 415 on the Trump tariff news, and we put in 2 inside days. We flushed back down at 432.63. Below that, we're bearish. Above this 467.83, we got a shot at the highs up here, back up towards 538. I don't know which way we're going to go here, to be candid with you. RSI is telling me, we had sort of a divergent low forming here, which would have continued the uptrend. However, we flushed off, and now on the daily, RSI is kind of confirming. On the weekly, we clearly have a confirming RSI here structure. Stepping out to the monthly, we still have the base of our whole model, so we haven't taken out that RSI, so we're going to put it in a higher low. But if I come in here and I'm going to draw in a trend line from our RSI numbers, we still have some room down to maybe about 33.76 to maintain what I refer to as RSI support. So structurally, I think the bias is higher without a catalyst to take us lower. That's just my opinion. That's the overall look to this pattern that I have here. Just assuming we have a tight impulse. Help if I had the right tool. But just looking at this as a shallow impulse leg up, a 5. Maybe we do something like that. Maybe we're back around 480 and then we flush from there. Is my thought at this point. Structurally, there's no reason why that shouldn't occur. All right, let's jump over and take a look at the SPY. Exact same look. Lockstep. No reason to consider a different structure on that, but that's my thought. Just to jump down to the weekly, we have one fib level that we're showing here lower at the 61.8 at 449. I think it's more likely we bounce back to this 531 kind of thing, and then we break down, which is right about where we are. So our next fib level is up around 546 and then 562, and then we should roll back over, is my thing. Now looking at structurally at the RSI, we have our diverging lows here. So to me, it's not confirming because it is not the cycle low, which occurred back in January of 29. So we had our divergent candle, our confirming candle and our divergent. So that is our low. So structurally, RSI is not going to take this out on the monthly. So right now, I tend to agree that we're going to head back towards the highs here as far as the S&P is concerned. We need to break below, like I noted on the NASDAQ, really for us to get bearish again, it needs to break below that 509.32. And really, the confirmation of the bullish move is going to be a break above that 548.62. Then that'll confirm that move up to the 618 level or 600. Now, I wanted to look at emerging markets because actually I'm kind of surprised we're holding up this well. Tariffs came in. So we're going to see at least gap fill out here back to 42 bucks. That's kind of a safe place at the moment. The only thing I don't like is this confirming look on the daily in RSI. And our challenging part is the entire tape here dating back to 2004. We had our divergent low that occurred here, and we have a deeper RSI print off of this low here that occurred at 33. So this looks structurally like an ABC pattern, so maybe we get something like this at some point. But on the shorter time frame, it clearly looks bullish. And the other catalyst that we potentially have here in emerging markets is the tariffs working themselves out. So I think that could push us back up towards highs. So I think this is a pretty safe place to park, is really my point. Then today I wanted to look at GDXJ, which is junior gold miners. They got a lot of room to the upside here, people. I mean, if we're going to continue in this volatile phase, any back test to 54 bucks is buyable here. That's just my 2 cents. Looking at the Russells, this has the most catalyst to the upside, even though it has the exact same look as the NASDAQ or the S&P. So when we come out and we look at the weekly, you'll notice where my taglines are for RSI. And this is how I measure. Just a quick visual. So when we put in our prior lows, you have a distance between your first low in RSI, which is confirming. It's not confirmed because it's not the lowest low in RSI. So what confirming means, it's occurring on a shorter time frame, but it still should reflect some kind of divergence. So then once we put in our divergence, and then we finally put in our low with some more exhaustion that occurs with a higher low in RSI, this is a repetitive pattern that occurs in the whole wave. So when we come back over here, we should get a similar pattern here. Now, the one thing that's a big difference between this catalyst and this catalyst is how extreme it is. Now, ironically, this is the exact opposite of what this pump was from the September of 2020 push up to highs, which went into March. Almost the same exact slope, but in the opposite direction, which I find is ironic. Now, this is a 142 to a 234, so about 90 bucks as far as a move. So 245. So really, we have room down to about this 167 for this to be equal to this. Now, it doesn't necessarily print exactly, but it rhymes. It's pretty close. So just structurally, if I'm looking at this, so we have the potential of getting as much as 50% back. And I'm just going to use my fib extension tool as I'm chatting here. Reason is it's a better measure of what a back test would be in using a cycle. I had to change my color. So, we could push back to the 50% at 213 in the Russells here before we roll back over. It's got a lot of room. So this push up, even though that was our low, the breadth of this candle, we blew past 23.6. So that's confirming a bullish move. So we break back above that 191.39. Honestly, you can chase this at least to 200 for 10 bucks. And probably 213 is a pretty solid bet once the FOMO comes back into the market, because this was the weak sister and in that pump off of the Trump news. Notice how aggressive the breadth was here in the Russell. Even though you had a similar breadth in the NASDAQ, it was not as high. Russell should be our catalyst to the upside. Now, just real quickly, I want to look at the Dow, and then we're going to cut it for the day. This has the best looking structure right here, peeps. It does. I mean, we're coming right off of this demand zone. We pushed it, tested it, back tested it. We set our low in almost to the tick, right? Off of our prior low here. Look at this. Our low from our June 24, right here. We tested it. It held. That was a back test. So we had this push up, back tested the lows, it held. So a higher low indicates the start of the uptrend. So that is what basically is occurring here. However, I think the Dow also could be just as aggressive as the Russell. And that has a lot to do with where the orders are. But let me jump out to the weekly and give you the same visual of what I see as far as RSI. So we have our confirming pattern here. I'm looking for the same similar pattern over here. All of the indices right now look the same to me. It's just a matter of who's going to move the most. I think the Russell. I think next is the Dow. And the reason I'm not favoring the Qs on a bullish move here is because they are the victim to the Trump tariffs. That's exactly where it's at. Well, that's what I've got for this week, folks. Great trading. Until next time.